for joining us. Tiff Macklem, if you read the headlines, has used some pretty strong language to describe the consequences of a prolonged U.S.-Canada trade war. You continue to believe that that's not where the two countries are headed, correct?
Yeah, I mean, it's certainly a high-stakes negotiation. At the start of this month, the market got very scared about tariffs hitting. We got right down to the deadline before it was waived. And now the market is increasingly of the view that tariffs are never coming on Canada, or not in a big way, aside from things like steel and aluminum. So there has been a lot of noise out of the Trump camp, but it's always been our base case that he cares more about the stock market than he does about the trade balance. And you can't really have a win on both. He's using it to negotiate. It's unclear exactly what he wants from Canada. At face value, you'd say that he wants something done about fentanyl. That's what they're saying, and that's been done, but presumably not enough yet to waive the tariffs next month. But I think they want to renegotiate the USMCA, and they want to renegotiate it sooner. So we'll see if Canada gives up some ground on that. But, you know, right now, the market, whenever there are tariff headlines, there's very limited market reaction, unlike when there was at the start of the month. So there's been a big rethink.
You don't think that the swoon that we're seeing today and recently in the North American stock markets is a reflection of tariff worry and trade war worry, do you?
Well, you know, in a lot of ways, it's hard to pin down to one thing, but there is this sort of mountain of worry that seems to be getting taller every day. The geopolitics in Russia and the Ukraine are very uncertain. You know, you had Walmart yesterday talk about a resilient consumer, but not in the way that people wanted to hear. Now you have Walmart off almost 10%. So you have a weakening U.S. consumer. Today, you had an inflation expectations report about long-term inflation expectations from the University of Michigan in the U.S. It hit a 30-year high. So now you have some inflation worries creeping in. You have some growth worries creeping in, tariff uncertainty, high valuations in the U.S., and you're starting to see, you know, some cracks in the AI story as well. So there is, I think, just a point where markets say, just take me out a little bit. Very high leverage in markets as well. And we're starting to see, even in the currency market, a lot of these big trends like U.S. dollar strength starting to come under a bit of fire right now. So there is a lot up in the air around that, and I think that's what's unfolding today in the market. And I think that can run for a little while until we get a lot more clarity on what's coming. American Congress is another one. They want to pass a tax cut. It's going to be difficult.
Okay, let's talk about Canadian politics. You've outlined your views on the appropriate federal government policy that markets, and I think yourself would like to see, something that's more growth-oriented, more productivity-oriented. The big thing that's changed since the last time you and I spoke is that the polls are showing that Pierre Poilievre and the Conservatives are essentially running neck and neck with the hypothetical Liberal Party led by Mark Carney, who of course is significantly ahead in the polls. Which option do you think the markets would prefer, a Poilievre Conservative Party or a Liberal Party led by Mark Carney, who's talking much more market friendly lately?
It is. I mean, there'll be a shift to the right one way or the other. I'll be interested to see how Carney campaigns in the election when it starts. Right now, he's not distancing himself a lot from past Liberal policies, but that's understandable given that he wants to win the Liberal leadership. You'd like to see him move a lot closer to Pierre Poilievre. And he's talking about building again, right? And I think that's a message that's really resonating. If you take a step back, there's this incredible opportunity in Canada right now, and this change of thinking that we have to come together, build, make a stronger country, get growth going again, put aside some of these historical squabbles or bad spending priorities and focus on growth and strengthening the country. Now, I think the market would certainly prefer a conservative majority in terms of where Canada is going. But, you know, if everybody can come around to the idea that this needs to be done and a consensus takes hold and it actually starts to get done, which is obviously the hard part in politics, that would be the best sort of thing. But if you get a scenario where tariffs come off or we get past that discussion, global growth is okay, and we get a strong new Canadian government with a growth agenda, you can get another 3 or 4 cents higher in the Canadian dollar here into the end of the year. So there's a lot of optimism, I think, that can start to creep in now.
Okay, we're out of time, but let me squeeze one more in. The high-speed rail announcement from Ottawa earlier this week. The C.D. Howe Institute, a conservative think tank, likes the announcement and says it will generate, over the longer stretch, significant economic growth. What do you think of the high-speed rail announcement? Is it the type of building, in this case, it's physical building, that you would like to see?
That's it. Well, I'm right here in Peterborough, so it's going right through here, and make it a lot easier to get to the BNNBloomberg studio in a faster time. But it's exactly, I think, what Canadians want, but they want it to be actually done on a reasonable time frame and on budget, and that's the critical thing in Canada. That's been a hiccup, and we need to probably change some institutions to make that happen. That's, I think, what everyone would like to see in the years ahead.
Adam Button, Chief Currency Analyst at ForexLive, from, as he noted,